Hello and welcome to episode 2 of Market Secrets investment series, which is asset allocation. So what is asset allocation? Asset allocation is an investment strategy that aims to balance risk and reward by allocating a portfolio's assets according to individual's goal, risk tolerance and investment horizon. So to put it in simple terms, asset allocation should be based on your goals, your risk tolerance and your investment horizon. There is no point in investing for a short-term goals, say buying a car in 2 years through equity mutual funds. In such cases, we should go for debt or arbitrage funds. If your goal is say long-term for about 5 years, then you can go for equity funds. Basically, your asset selection should be based on your investment horizon. So, if your investment horizon is less than 3 years, always go for debt or arbitrage funds. In case if your investment horizon is above 3 years, you can go for any of the equity funds. So, I have given the sub classification here. If you do the asset allocation properly, then everything else will happen in your favor automatically. That is the magic. I know you believe investing is not that simple, so let me explain it in a better way. There are three main asset classes, which is equity, fixed income or debt, and last is cash and cash equivalents. Each of these have different level of risk and returns. So each of these assets will behave differently over time. But from my perspective, we have 5 different asset classes, which is equity, bond or debts, and third one is gold, fourth one is real estate, and the last one is cash. So the first step here is to define your asset allocation. Here is my asset allocation. So in my portfolio, 45% of it will go to equities, 25% will be in debt, 10% will be in gold, 15% will be in real estate, and 5% will be in cash. I don't believe in age-based asset allocation. It should always be based on your goal and your time frame. So the above mentioned asset allocation suits me better, and you are free to adjust it based on your goals. We'll talk about each of these assets and different sub-classification under these assets in the forthcoming sessions. In today's session, we'll see how asset allocation can make investing easier. So let's take an example. Imagine you have a portfolio worth 10 lakh rupees and you have invested based on the asset allocation mentioned in the previous slide. So your asset allocation should be in this particular format. So with the 10 lakh amount, I have invested 1 lakh in gold and 1.5 lakh in real estate. 2.5 lakh is invested in bonds and 4.5 lakh is invested in equities. And let's say 50,000 I'm holding it in cash. It's a liquid cash. So you have to always remember that the secret here is to maintain this asset allocation at all the times, and you can use this 50k as a cushion for rebalancing your portfolio with ease. So now let's say after a couple of years of investing, there was a sharp rise in equity market. So the stock prices rally and hence the weightage of your equity portfolio is rising. So after 2 years, this is how your portfolio looks. It's just an example. So since there is a rally, all other asset instruments are not generating good returns. So the 1 lakh that you have invested in gold is now worth 90,000, and 1.5 lakhs you have invested in real estate is now valued at 1.6 lakhs. And the 2.5 lakhs that you have invested in bonds, has now turned to 3 lakhs, and 4.5 lakhs that you have invested in the equity is now converted into 6.5 lakhs, and the 50,000 cash that you are holding is now worth 60,000 rupees. So just an example, and your total portfolio is worth 12.6 lakh rupees. And your asset allocation is now 7% is in gold, 13% is in real estate, 24% is in bonds, and 52% is in equities, and 5% is in cash. So due to the run in equity markets, my asset allocation is now totally messed up, and now I have to sell 7% of equity, and I have to reinvest that particular amount in gold, real estate, and bonds. Let's take the other side or scenario 2. After 2 years, instead of there is a peak in the market, there is a crash in the market, and your asset allocation is now looks like this. So now the 1 lakh that you have invested in gold is now worth 1.4 lakhs, and 1.5 lakhs invested in real estate is now worth 1.6 lakhs, and 2.5 lakhs that you have invested in bond is now worth 3.5 lakhs, and 4.5 lakhs that you have invested in equities now turned to 3.5 lakhs, and you are still holding the 50,000 rupees in cash. So in such a scenario, again your asset allocation is totally messed up, because 13% is in gold, 15% is in real estate, 33% is in bonds, and 33% is in equity. So even in this case, the asset allocation is again messed up even when there is a market crash. So in such a scenarios, I have to sell my holdings in gold and also my holdings in bonds, and I have to reinvest that particular amount in equity to bring my asset allocation to the original or initial planned levels. Also, as mentioned earlier, you can utilize the 50,000 rupees cash that is available for any minor rebalancing in the portfolio. But did you notice what is happening indirectly when we do this asset rebalancing? It indirectly encourages you to buy low and sell high, and that is the only secret you need to know to earn money in the market. Most of us are too focused on selecting the best stocks and mutual funds for investment. But what is the use of identifying such stocks if you cannot buy it during the lows? But by following the right asset allocation, you will invest automatically during the lows and exit on the highs. If you keep rebalancing the portfolio periodically, either once a year or whenever there is a market peak or market crash, then you will become rich very faster than you can imagine. I know you have a question, which stock or which mutual fund to invest, but I would like to insist again, you don't have to focus on finding the best stock or a mutual fund. You first have to focus on the asset allocation, because if you do this asset allocation properly and if you rebalance it periodically, then whenever there is a market peak, then you will automatically sell equities and you will invest in other asset classes. And whenever there is a crash, the rebalancing will force you to buy more of the stocks. So this will automatically, bring in the discipline that is needed to be successful in the market. So I would say focus on the asset allocation first. We'll talk about which stocks or mutual funds to invest in the forthcoming sessions. Also, I know you have a question on how to invest in real estate with just 1.5 lakhs. We all have that covered in the forthcoming sessions. The next session is on sub-classification in asset allocation. So subscribe to our YouTube channel so that you won't miss that particular video. Also, hit the like button if you have enjoyed this video and share it with your friends if you feel it is worth sharing. If you have any queries or comments, leave it in the comment section of this video. If you are a trader, we have a lot of videos on trading strategies as well. Go to our playlist in YouTube and check them out. Visit our website to know more about our offerings, and also join our Telegram channel for daily market updates. Links are all available in the description section of this video. Thanks again for watching, and have a great day.